what's happening to the world growth as a result of Donald Trump in China, and two, back home as well, growth seems to be faltering. We can argue that the headline number shows a particular number, but CM data, IIP data, etc., everything points towards a number which is arguably a lot weaker than what the headline number seems to suggest. Where in the cycle do you reckon are we?
So I think there is certainly a global volatility emanating out of geopolitical moves, and economy certainly is something that first gets impacted. Trade is right in front and center of all countries, companies, understanding how trade moves, whether it is a US-China or whether it is a Brexit or any other trade agreements that open up for renegotiation. Trade's important, become a very important element, and it's coming out of a political protectionism that the global polity is following, and therefore one has to be careful. One has to ensure that one's exposure is focused on domestic markets, which is what we do. As part of the, steel is normally a late cycle play, that it rises late and kind of falls late. But and we've seen volatility in other commodity products. I think if there are no kind of black swan events, we are in the mid-cycle play, and I think that is something that where the spreads will be range bound. The demand in certain sectors will have impact based on how the credit moves in the country, how the underlying sentiment is. Obviously, we are currently in a very uncertain political environment due to the elections. Hopefully, there would be a clear view after, say, a month or thereabouts, depending on how the outcome is. And everyone who kind of operates in a particular geography bets for the long term. And as a company where our assets have a life cycle of 25 years to 50 years, we also take long-term bets. And India is a geography, irrespective of political dispensation, which has long-term attractive and fundamentals. And that's what most investments in the country across sectors, the investors would look at. So the ability to ride out any rough phase, whether it is one quarter, couple of quarters, or even a year or couple of years, is an important element of any organization's strength in terms of riding and managing risks. I think we look at it from that perspective. We would, in certain circumstances, look inwards on efficiency, inwards in terms of cost takeouts, and remaining lean and mean, and ensuring that we focus on the right levers. Overall, there are externalities where none of us can individually influence, but collectively face. And I think that's what is happening at this point of time all across the world. This is not going to go away soon, and therefore this needs to be adjusted into business decisions and evaluations for new investments and so on. And it all depends on the risk appetite of the company as to whether it can ride out this kind of volatility or play a safe bet by not doing anything. At this point of time for us, we've taken the call for investments in Kalinganagar. We're going ahead as scheduled because we believe that's fundamentally important. Even at a 5-6% growth rate in India, India will require about 5 to 6 million tons of incremental steel every year, and that's the play that we want to participate in, and that's why we are investing in world-class assets as far as Kalinganagar is concerned. So I think it's a view one has to take. It's certainly a risk-prone world, a volatile world, and has its own uncertainty. But we will, as good management across companies, across sectors, I'm sure we we have to recognize the fact that we have to manage our risks well enough.